The Australian Financial Review.
Hello, I'm James Thompson, Senior Chanticleer columnist at the AFR. Welcome to our weekly news breakdown of all things business, finance and markets. With me today, as always, is my Chanticleer colleague. He's back and charging into the end of the year like Santa on a turbocharged sleigh. It's Anthony McDonald. How are you, Anthony?
Oh, James, it's that mad scramble time of year, isn't it? But I'll tell you what, I'm looking forward to today's episode, hearing from this gentleman across from me today.
Absolutely. Well, this week we're turning the Chook podcast on its head with a very special guest. He's the chief executive of the country's biggest bank and one of our most thoughtful chief executives. Welcome to the Chanticleer podcast, Matt Comyn.
Thanks very much. Great to be with you both.
Matt, we're thrilled to have you today. I'm right in saying I believe that you're a long-time listener to the Chook pod. Now, first question, who would you say is your favourite, me or Anthony?
Oh, impossible to decide, but I guess you got to side with the senior Chook, James.
Good answer. Do you have a routine? You know, some of our listeners like to mow the lawn or do laundry or walk the dog or go to the gym. How about yourself?
Well, I try to listen to the podcasts on Saturday morning sport. My two teenage children are far more malleable to that. My 9-year-old can be quite a bit resistant, but yeah, that's when I listen to the podcast, but obviously try and consume what I can during the week whenever I can.
Yeah, so tell us, Matt, how do you normally get your news? I mean, do you listen to other podcasts or how do you go about it?
Yeah, I mean, most of the news I read, podcasts, I'd probably listen to more sort of tech podcasts. Occasionally I'll listen to The Daily or The Economist. It depends a little bit on what the topic is and a little bit on how much time I've got. Yeah. I've just come out of a 3-day board meeting this week, so not a lot.
Fair enough. Matt, you'll know we start off the top with the sort of news of the week, and I think it's fitting that we start with the big news out of the banking sector, and that was the announcement of Shane Elliott, the CEO of ANZ, will depart next July to be replaced by the Portuguese-born banker Nuno Matos. Anthony, I'm going to come to you first here.
Oh, yeah.
What's the story here? Matt, I'm sure will listen very in anticipation. What's the story behind the story with Shane's departure?
Well, James, I mean, first of all, Shane Elliott had a great run. You know, it's nearly 9 years since he took over. It'll be 9.5 years by the time he actually leaves in July. I mean, he did a lot, and Matt knows better than you and I, but banking changed a lot in that time. What Australian banks look like changed a lot in that time. They got out of a lot of things, sort of simplified. Shane was on that journey like the other banks, but I'm not sure he was ready to go, James. To be honest, I know the statement was all very cordial, but I mean, Shane wasn't talking on Monday when the announcement came out, and that's often a sign. Like, remember when Peter King handed over to Anthony Miller or Ross McEwen handed over to Andrew Irvine at NAB? Both of them were real double acts, and you could feel the sort of love in the air. On Monday at ANZ, it was a single act. It was the chairman, Paul O'Sullivan, explaining it, and I reckon there's a fair bit going on behind the scenes, James. I mean, as I wrote, you know, ANZ board's been busy out meeting shareholders. It's had the independent consultants talking, like surveying those major shareholders, which that survey didn't come back too good from what I hear. The regulator hit it with this $250 million capital overlay in August at the same time when the other three banks, including Matt's, have had their own capital charges dropped. You know, there's this market scandal washing around, and now there's a new CEO. So it's a bloke someone who's never worked in Australia, doesn't know the regulator, doesn't know ANZ shareholders, has never been to a Senate inquiry, has never gone through a round of negotiations with Australia Post or with the Foxes at Armaguard. I mean, I wrote a column saying ANZ's board needs to have a look in the mirror, basically, and think about whether there's enough banking experience on the board and that it's on the nose with a lot of Australians' institutional investors. And I mean, I stand by that. Now, ANZ's chairman, Paul O'Sullivan, he doesn't agree. I mean, he thinks, telling me I've got the wrong end of the stick, but you've only got to look at what the proxy advisors are saying ahead of its AGM next week, James. And there's a few out there recommending investors vote against its remuneration report, which is always a good litmus test. And tell you what, James, the first investor I've seen to vote on it is the big Californian pension fund, CalSTRS.
Right.
And guess whether it's voting for or against the REM report at ANZ?
Against.
Indeed.
Matt, we won't ask you to comment on what's going on behind the scenes at ANZ, don't worry. But you would have had a bit to do with Shane over the journey. And, you know, the Big Four's a small group. Bit sad to see one of your peers go.
Yeah, I mean, look, it's interesting. We don't see each other much. I see CEOs from other industries a lot more than I do in banking. But, obviously I wish him well. As Ant said, some of that sounds a little unusual. I mean, I think the AFR seem to have broken a number of exclusive stories about ANZ over the course of the year. And, of course, that came out on Sunday night.
Yeah.
I guess the other thing, having seen that up close, I mean, those sort of processes and things are, pretty personal for the people involved. And I also look at the, talented and long-serving executives in ANZ that missed out on that role. And, I can imagine that's been difficult too.
Yeah.
Look, it's a small industry. And, it's a long game. So you never know. As Sant said, Shane's got another sort of 7 months to go. Certainly wish him well. Whilst we're competitors, it's certainly never personal, and you hope and wish everyone the best for the future.
Yeah, Matt. Now, so Nuno, he's the bloke that's coming in, very much the international banker. He's got lots of experience in some really interesting markets. But as we know, Australia's a unique market, and I'm not saying an international banker can't come in and run an Australian bank, but what would you tell him to try and learn about before he gets here and has to take the top job?
Well, I don't know that he needs any gratuitous advice from one of his competitors, but look, I know of him. I don't know him. Look forward to meeting him in due course. And I mean, it's still, it's well into next year, so it's quite a long transition period. But yeah, look, obviously the markets are very different. But, I guess we'll see. It's been a number of changes at the major banks over the course of the year. So I guess we all know what we're dealing with now. And I think next year will be interesting as this year was too.
Put it this way, is there something that you learnt in your first sort of 12 months when you came in to run CBA that you wish you knew ahead of taking the job?
There's a lot of things that you learn coming into the role, and there's a number of things that are easier when you're coming from inside the organisation. You know a lot of people, you've got a lot of networks, you've got access to a lot of information, the people. I think dealing with a whole new group of stakeholders, working with a board, as you'll both remember, it was not an easy year in 2018 when I came into the role. So, I think I learned an enormous amount in the first couple of years in particular. And like anything, you learn a lot through the difficult times. So, I certainly don't wish that on ANZ or context like that, because that would also be bad for the banking industry. But as you said, he's very experienced, so it'll be interesting to see how it all plays out.
Can't wait till he has a senator brandishing a coffee cup at him during estimates.
And $5 notes.
Ask him about payment surcharges. Something to look forward to.
For sure.
All right, Matt, we're going to break the podcast into two main bits. We'll have a look at a year gone and then a look at what's coming. Let's start with, I guess, the big story for banking in a way, and that's the bank share price surge. Clearly, maybe the biggest story of capital markets, and no one's done more to lift the index than CBA. The shares are up 39% year to date. And lots of people claim it's baffling and sort of inexplicable, and I'm sure you get questions from investors about it when you do the rounds. How do you think about the valuation, Matt, and what it says about where CBA is?
Yeah, I mean, look, we do get questions from investors, but, we also get a lot of questions just externally. And, I know I've said something like this before, but, I feel like there's very little value in us studying the share price itself. Certainly the near-term movements. I think where the value comes from is understanding, what investors really value and, where are your competitive advantages, how do you invest behind those. And I think we've tried to do that with real, focus and discipline. And actually, I was watching you, James, interviewing the Chemist Warehouse founders last week. And, one of the things that they said is consistency, long-term execution, over a long period of time. It sounds really easy, but it's actually really important. And so, we've really tried to invest behind where we think we've got a competitive advantage and try to execute well and consistently and deliver for our shareholders and all of our stakeholders.
There's a lot of talk, Matt, about the flywheel, I guess, effect in CBA. And every business likes to think it's got a flywheel going, but the CBA one has been sort of working really well You get customers in, you build a relationship with your customers. That helps to build scale, of course, and efficiency, but it also helps you understand those customers' risk profiles better. That results in hopefully in a lower cost of capital. That results in being able to invest in the business and reward shareholders at the same time. And that means you can go out and get more customers, and so the wheel keeps spinning. Do you talk about it in that way inside the bank, that continuing to keep the momentum up matters?
Absolutely. I mean, you understand it very, very well, James. That's an excellent summary. I mean, we seek to acquire new customers, and as you've covered during the course of the year, we've done extremely well with migrants. We've grown our main bank share in both our retail and business bank strongly. We seek to engage, and particularly our customers engage with us through our digital channels and the app. We're seeing record levels of logins and engagement. Then we want to deliver high quality and rewarding personalised experiences. On the back of that, it helps us to better serve, to better understand our customers, to be able to identify risks, which enables us to, over time, perform better through the cycle, generate capital organically, which we can translate into fully franked consistent dividends. And then we try to be very disciplined with our capital, both in terms of the investments that we're making to make sure we're always getting a return above our cost of capital. And I know you've covered a lot. Sometimes I think we look at the market. Some banks seem to be pursuing a strategy of a lot of volume growth with returns below the cost of capital. And by definition, that is value destructive. And I think the other thing is really important is just managing your share count. If you end up issuing equity at a very low price and then buying it back later, it's very, very dilutive. And, those things can make a really big difference.
Yeah, Matt, if CBA is the story of Australia's equity market this year, then NVIDIA would have to be the story of global markets. And you've put a lot of time into AI this year, been to the US to check it out, talked about how quickly things are changing on the AI front. Will we look back at this as a pivotal year, or are we not quite there yet?
Yeah, I mean, look, I think it's probably been the story for the last couple of years, and regrettably, I don't own a single share in it. But look, I think it's been an incredible growth for them in terms of both the computational power, the demand, and then also they've been really been able to expand the supply and maintain a very, very strong margin. Look, I think there's a lot of focus on the potential. Clearly, and you wouldn't expect it to, the potential hasn't been realised. And so I think we're still early in terms of the practical translation into significant improvements in a way a number of things are done. And so I think, the next couple of years actually going to be interesting. The huge capital expenditure that we're seeing, particularly across the tech companies, how does that translate into revenues and cash flows over the next couple of years? I mean, I'm still a big believer of the long-term potential. And there's been a lot of developments this year, and there's still some important gaps, I think, that will really need to be narrowed to see that have a bigger impact in terms of a bigger positive impact and hopefully to productivity in the years ahead.
Matt, one of the really important moments this year, in my view, was when you made your way to Canberra at the end of August and delivered a bit of a message to the nation's politicians. We've got some audio of that moment. Let's hear it.
I find it somewhat alarming in the context of this is not about the Commonwealth Bank, but I see this now again and again, over and over. Businesses in Australia are being represented in this false dichotomy that for a company to earn any sort of income or profit, it is therefore inferred often or directly related, and not necessarily by you, Mr. Laxale, but on a daily basis, as somehow being unjustly extracted from consumers. And I think this sort of continuing, often sort of fact-free rhetoric that's being published more broadly is very damaging. And I say that damaging insofar as I think it is really eroding trust in institutions, in all of our institutions.
Matt, this moment really resonated with the business community, but I think the pressure on business looks likely to probably step up as we head to the election. You had a brush with this in the last couple of weeks with your $3 cash withdrawal drama. Is there any chance we're going to see a more sensible environment around business and politics and how those two meet, or not before the poll?
Well, James, I think the first thing is, as a large company or a publicly listed company, you should expect scrutiny. And I think it's important that the media and other stakeholders hold companies to account where it's justified. And so it wasn't at all about that. It's more, I think there's maybe too much of the debate, or it started to creep into the debate, more of a polarizing and extreme argument as opposed to something that is based on facts and logic and can be reasoned, sensibly and with due courtesy. I think there's been some poorer examples where there isn't the same sort of constructive challenge and debate, in the sense of looking for policies that genuinely take the country forward and advance the debate, as opposed to having polarizing debates. And I think that's problematic for both businesses and for institutions more broadly. I think we're seeing that globally. And as cost of living and financial challenges have increased, I think people are less confident and less trusting in institutions and in governments. And given the economic reform that will be necessary, certainly over the medium term, I think that's troubling.
Yeah, we've got big problems to solve, don't we? I mean, we need that sort of Team Australia vibe we had during the pandemic.
Yeah, look, I think business has an important responsibility to advocate for what I guess we consider to be the sensible middle. I think there's a role to really elevate some of the key issues like productivity, which I know you've spoken about, but linking it carefully and deliberately to rising income levels and living standards, and setting out really the case for the sorts of economic reform, and to make sure that we bring everyone along and those benefits are shared equitably. Because, and you and I have spoken about this before, James, I think there's a very important compact between future generations that they need to, we need to be leaving, the country better off for the next generation. And I think there's evidence that, younger people increasingly don't feel like that's occurring, and not unreasonably either. And I think more needs to be done, and, a bit more of a sense of sort of a collective, which I think in Australia's history has been really, really important. More of a focus on growing the pie versus dividing it. And sometimes that requires that, we've all got to be prepared to give a little to make the overall better.
Yeah. Matt, do you want to write an editorial before you leave the office today? I don't think I've heard it quite as well put together as that.
All right, mate, let's change course a little bit. And we had the RBA board meeting this week. It's the 9th time they've kept rates on hold. But there seemed to be a distinct dovish change in Michelle Bullock's commentary. What's the outlook for the Australian economy next year? Where do you think rates are going, and how are businesses and customers positioned?
I should just jump in there, Anthony, and say the CBA economics team still on the side of the James Thomson February rate cut bet. We're still alive.
I can't believe they're going down with you, James.
They're going down with me.
They are, James. And I was actually just chatting to Gareth earlier because, the market actually, moved quite a bit after there's no question that the national accounts were weaker than expected. And then obviously the RBA statement and some others were coming back in from May to February. The labour force that's just come out is, a bit stronger. It's a bit of a head scratcher to go down to 3.9. So I think the market...
We should say that's the unemployment rate there, Matt, 3.9%.
Yes, thank you. And I think it was about 50-50 in terms of the market pricing for February. So your call for February is still alive, James. It's looking a bit better than it did a few days ago.
Thank you.
So how's the economy looking?
The national accounts are a good representation. I mean, growth has really slowed. And as you said, the governor made a point of calling that out. It's the slowest rate of growth since the early 90s. Wages aren't growing, though they're starting to slow, putting aside the very low unemployment rate, which is, of course, very good news. There's been a lot of pressure on households throughout the course of the year. Consumption is weak. We've seen broader data, and certainly from the banks over the course of the year, that's not translating into higher loan losses. But there's no question, the economy's growth and the pressures are there and emerging. And I think quite reasonably, people are probably finishing 2024 a bit disappointed that rates didn't come down. I think it's been a long, hard year for many of our customers, and there's I think sort of palpable sense of frustration. And so I hope for our customers' sake, absolutely, that there's a rate cut earlier in the year versus later in the year. But I saw one of the other comments that the governor made as well. I mean, prices are up 16% in the last 3 years. I mean, they're not going back. So, I mean, obviously, inflation hurts everyone, and especially people on lower income. So, I mean, it just highlights the importance of getting inflation back into the target band. But it's been a difficult year from that perspective.
If you think of calendar 2025, if we got a rate cut in the middle of the year or early part of the year, can you see a bit more growth coming through towards the latter stages of calendar 2025?
Yeah, we can. And look, there should be a rebound in household incomes as inflation comes down. Obviously, it will take a number of rate cuts for that to really flow through. I do think there'll be a rebound or a sentiment boost. Look, I think it's always important to be optimistic as well. Yeah. And as you look forward, the medium-term potential for Australia is absolutely there. And we see out into the later stages of this decade. It's not to say that there aren't challenges and that there isn't a need for reform and focus on the emerging sectors of the economy, because there absolutely is. I think that's going to be really important. But I also think there's lots of reasons why that at least could be delivered.
Matt, what's going to be the big story in the banking sector, do you think? Is it competition? Is it housing, that technology story, or is it all going to be sort of overrun by politics and the election?
I mean, I think the big story will be around the economy. I mean, ultimately, the underlying performance of Australia, certainly for us, is the biggest driver of our performance over that term. And so, I mean, all of those aspects are important in terms of housing, technology, competitive forces. There's so many different things that will continue to evolve. I think maybe one of the most important tasks for 2025 is to not pre the election. Arguably, that's the worst time, but perhaps not long after that, to really be collectively trying to make a bit of this case for the sorts of reforms that would be supportive of economic growth and improvement to living standards for all Australians.
Yeah, but it's going to be hard to get much of a word in before the election, isn't it? I mean, you did find that with that $3 withdrawal fee thing last week. It's just a very sort of heated atmosphere, or charged atmosphere is perhaps the best way to say it. Yeah,
look, that's right, James. But I mean, I think you wrote a very balanced column. And look, from my perspective, and in my role, as you know, I'm accountable for everything that happens at the Commonwealth Bank. I was surprised and disappointed to see that change had gone out. I said, I saw the Daily Telegraph. Someone had sent me the cover, the front page, and I was. I made a couple of phone calls, try to understand. I think the root cause of that. I mean, we just misdiagnosed that, or it had been misdiagnosed as a minor change, because almost 90% of people were better off. But of course, that's not the same as 100%. And I think, given the context, after a long, hard year, cost of living, look, frankly, the reaction didn't surprise me. Obviously, then understood it and made the necessary change in the morning. But I mean, there's no point complaining or being surprised. So when you're a very large company, which we are, and no one can understand the sensitivities, then you've got to be cognizant of that. And if you're not, then yes, things can turn very quickly. But look, I just think that's the world that we live in. So there's no point complaining about it. I think it's about how do you embrace it and understand it, and try to move the debate and the direction and the discussion in the right direction. And I think there's probably more of that to be done after the election. I mean, politics aside, I think when you get close to an election from a business perspective, I think most businesses are hoping the election's sooner rather than later, just for the the certainty and the clarity. And it's going to be an interesting start to the year. There's so many different predictions on when the election will be, and who knows.
Yeah. So not too much time for the morning podcast that day last week.
There's a few other calls that were going on.
Matt. So look, it's the end of the year. Look at James. You can see him. He's pretty tired. Tony Boyd's only good for one column a fortnight now. The well's running dry in here. We're handing you control of the column for the day, Matt. What Chook column are you writing about? What's the topic that we're not thinking enough about, do you think? You've got 1,300 words. It's due in a couple of hours.
For this week, or are you picking any?
Today.
You can write about anything you want.
Well, I mean, the column, the 20 columns that I like here, right, would be in that space that I talked about. Why productivity, which is a poorly understood concept, is so important for driving living standards and income growth. And I think we need to try and make that case lots and lots of times. And then if I had another choice, how do we make sure Australia and Australian companies are competitive, not just domestically and internationally? And as you know, I think be very conscious of, I think there is too much of a burden on younger working Australians, and I think we need to make some changes there. And if I had to prioritise in other areas, I'd be pretty focused on making sure all companies that operate here are subject to the same laws and make the same contribution via taxation, amongst other things, that other Australian companies do. So, it's probably more than one column.
One or two ideas.
Yeah.
We'll see if we can free up some time for you to write those columns, Matt. Sounds like a good series to me. Well, we'll take a break now and we'll come back with a really interesting question about industrial relations. Back in a sec. Welcome back. If you want to know more about what we're talking about today and a whole lot more, AFR subscribers can sign up to the Chanticleer newsletter at join.afr.com/Chanticleer. Every Saturday morning, the newsletter pulls together the best Chanticleer columns from the week and delivers them straight to your inbox. All right, we do a quick week ahead here, Matt. It's a big week in banking, but not for you. We had Westpac's AGM on Friday, and we've got NAB and ANZ's AGM next week. I've got two questions about AGMs for you, Matt. One is, how does the chairman manage to stand on their feet for 5 hours without a break? I've always been impressed by that feat of endurance. And I guess more importantly, what's on the mind of retail investors at the moment, do you think?
Yeah, no, it can be a long day, certainly for the chair of CBA. And, so it's not for the faint-hearted. Look, I think on the minds of retail shareholders, the vast majority is, from our perspective, strong, fully franked dividends. And, a reliable compounding performance over time. AGM's not always the best proxy for the broader. It tends to be quite sort of specialist. So for us, there was more questions questions on the Middle East, on Tesla, a couple of questions on performance, more on the environment, climate. We expect that. So it's a little hard to predict exactly what the questions will be next week. But I'll definitely watch the wrap up and be glad it's not our turn.
Fair enough. A couple of other things to mention, Anthony. Wednesday, consumer confidence is out. Business confidence was pretty tepid on this week, so hopefully the consumer's not reflecting that. Mm-hmm. And then on Thursday at 5 a.m. is probably the big one. The Federal Reserve in the US makes their interest rate decision. And I think, like for the RBA in February, it's pretty line ball. Some sort of robust, sticky inflation numbers, but the Fed seems to want to cut at the moment. Matt, any predictions here for us?
Yeah, I think they'll cut.
Right. Okay. Very definitive. Anthony, you're on the cut bandwagon?
I'm less certain than Matt. It's one of those ones where, a month or two ago, it was a no-brainer and the cut was coming, and then, then Trump gets elected and the whole pot's been stirred up and shaken and tipped upside down. So who knows?
We'll see. We'll get up early and have a look. All right. We love questions here on the Chanticleer podcast. This week, our question's from John from Roselle. If you've got a question you want to send in, you can email us at chanticleer@afr.com. You can also send us a question in audio form. Just record a voice memo on your phone, include your name and where you're from, and email it to us. And that's exactly what John's done.
Hi, James and Anthony. I read with interest the union membership went up for the first time in a decade this year. In light of the big strike at Woolworths in the last few weeks, do you think we're going to see more industrial action, or will it calm down as inflation fades? John from Roselle.
Yeah, great question, John. I think probably a bit of both. I hate to sit on the fence, but I think we probably will see a bit more industrial action into the first half of next year. And it probably only settles as we see inflation come off a bit. Anthony, Matt, what do you reckon? This has been a sort of developing story, and poor old Woolworths has had a tough year. They're caught in the middle of it again.
Yeah, look, I mean, I hope not. I don't know a business leader that doesn't want to have a constructive and productive relationship with their employees. And I think that's in all of their interests. In that case, for the company, for employees, and also for customers. So, yeah, I think it would definitely be, a shame if that did happen, but certainly hope not.
Yeah,
James, I saw the RBA's Sarah Hunter. She's in charge of the economics, sort of talk about this topic a month or two ago at the City Conference, and she was sort of talking about inflation expectations, and she said the union's inflation expectations had sort of come off a bit recently, which is important because, they're the ones that are driving a lot of these wage decisions. Yet since then, in New South Wales here at least, we've had nurses talk about strikes, train drivers talk about strikes and pushing for big numbers. We see Woolworths, I think, paying an extra 11% over 3 years for the warehouse workers. So there are still strikes out there. There is industrial activity out there, but it feels like the quantum of the increases is slowing as the inflation has come down.
Yeah, well, we'll see, Anthony. I think I hope for Matt's outcome, and I worry that we might see a bit more angst in that area. Matt, as you said, it's been a long year for bank customers. It's been a long year for bank CEOs too. So we really thank you for coming on the podcast and giving us a bit of your time. Thank you for being one of our very early listeners and supporters. And thanks for sharing your insights today. I think it's been great to get your sense of where the world is and where it's going next year.
Pleasure. It's great to chat with both of you.
Yeah, thanks, Matt. I hope it's more enjoyable than a 3-day board meeting.
Thank you very much.
Well, and of course, Matt, we look forward to hearing your interview on our sister podcast, 15 Minutes with the Boss, and that episode's coming out in the new year on January 28th. So more Matt Comyn is never enough, I reckon. So thanks for joining us, Matt, and thank you, Anthony. One more episode to go next week, and it'll be another big one, so look forward to that.
Yeah, I'm looking forward to it as well, James.
See you next week. If you like the podcast and you want to hear more, consider sharing or giving the podcast a review, as it helps other listeners find us. And don't forget to follow wherever you get your podcasts. At the Financial Review, we investigate the big stories about markets, business and power. For more, go to afr.com and you can subscribe to the Financial Review, the daily habit of successful people, at afr.com/subscribe. Chanticleer was hosted by me, James Thompson, and Anthony McDonald, with our special guest, Matt Comyn. And it was produced by Alex Gow and Lap Fan. Our theme is by Alex Gow. The executive producer is Fiona Buffini.
The Australian Financial Review.